But for more insight on the early morning trading, Rebecca Walser, President and CEO of Walser Wealth Management and tax attorney, joins us now. Thank you so much for being here. Now, as one of the biggest weeks on Wall Street gets underway, what are some of the biggest metrics that you're kind of keeping an eye on?
Well, you know, especially with Alphabet, Google, and Microsoft reporting today, and Visa, it's going to be a really interesting dichotomy, Shannon, because what we're going to see is that Azure, as we were just talking about in the previous segment, you're just alluding to, it's really affected by how other businesses are doing. It's really an IaaS, infrastructure as a service business now with Azure, and that is going to be impacted by how other businesses are faring in the broader economy. So I'm really looking to see how Microsoft performs in this final quarter of their fiscal year, and we'll see how that impacts. I'm expecting the same also for Alphabet. You know, Alphabet has really made some strides in advertising, but they're moving towards, a lot of other things, infrastructure as well as just like Azure, but also the wearables and the medical, space. So I'm really interested to see how the impact of the economy so far this year has impacted their earnings.
Yeah, well, speaking of the economy, the Fed is set to conclude its two-day meeting on Wednesday. So what are you expecting there?
Yeah, I'm expecting, really, Shannon, I think that we have at least a 75 basis point rate hike coming. I think that was really sort of solidified once we had such a great June economic numbers from an employment perspective, not good economic numbers, but the employment report that really were surprised to the upside, I think really set in the fact that the 75 basis points is going to happen. And of course, then you add on to that the higher inflation that we got for June, the increase from 8.6 to 9.1, and you see that, the Fed has to be serious about this, and it is going to be a shock to our bond markets. We're going to continue to see, unfortunately, the financial devaluation of our existing bonds. You talk about 14 years since 2008, where we had almost zero interest rates, and now we're raising them as aggressively as we've ever seen. There is going to be a financial fallout on our bond market, and that will unfortunately have a trickle effect again throughout the economy. So the world is literally before our eyes, economically, unfortunately, coming down. And that is going to have a contagion effect, especially China's situation over in the United States. So the Fed is going to be very strict and make sure that the world and the investor community knows that it's serious about getting control of inflation.
Well, let's speak more about that trickle-down effect that you speak of, especially with inflation, because if the Fed does institute that 75 basis point rate hike, like you said, and a lot of people are expecting to happen, do you think that we'll start to see the inflation actually start to tick lower? And how long do you think that's going to take? Or do we have to wait until September for them to raise basis points again?
I do think it will have an immediate impact, and it is already having an immediate impact. People can't afford to go out and buy houses now at the houses, at least that they were looking at before. You're talking about $100,000 to $200,000, $200,000 difference in an interest rate change over, the last 4 months. I mean, you could maybe afford a house that was that much more expensive with such a lower interest rate. So we've already seen mortgage applications drop tremendously. This is obviously affecting all of the financials. We've seen car loans drop tremendously. So this is already impacting the consumer. Unfortunately, they are having to spend way too much on energy costs, gasoline, and food, and that then makes them not able to also make bigger purchases, and certainly bigger purchases that cost more money. So our economy is a services-based economy, and when people can't spend money or they don't feel like they can spend money, and we've seen the credit card balances going up astronomically. It'll be interesting to see Visa's results today for their quarter. But basically, all of these things are going to make demand go down, and that will obviously bring prices down. But how fast it can happen, Shannon, is something that we've never seen this long period with low interest rates and then just a massive rush to raise rates to an almost normalized level that we've not seen in 14 years. So yes, it's absolutely going to have an impact.
Yeah, well, I hope, like you said, those prices come down because we are hurting out here. And amid this market downturn, are there any particular sectors that you're really keeping an eye on?
It's interesting. A lot of people think that the financials will do better when rates go up, but they don't realize that people won't take the loan. So we've seen, obviously, the financials come down substantially with their results, and that was totally expected. GM was a little bit of a surprise how much their earnings came down. So, again, we're experiencing this, Shannon, throughout all sectors. And unless we really have demand destruction like we've had everywhere, really, in a lot of different sectors, we're not going to have a breakout, except for maybe commodities, energy. If we can keep, if energy keeps, and especially oil, if it stays very how do I say it? If it remains very elusive based on Russia and Ukraine and all of these things, then energy could still be a good play. But you have to be careful because you don't know what's going to happen with all of these interrelationships between basically OPEC and all of the rest of the world and how to get this oil situation resolved.
Yeah, it definitely needs to be resolved as soon as possible. But let's talk about your outlook for Alphabet and Microsoft reporting earnings today. How will these numbers sort of impact the broader market?
I mean, I think if we get a beat, that would be a very positive sign to the market that the tech companies, especially the ones that are really the broad spectrum, big blue chips like Microsoft, Google, obviously Alphabet, are going to provide. But I also think, Shannon, if we get a miss to the downside, that the market will be, unfortunately, quite impacted, because that will mean that it's a broader signal, Shannon, that businesses aren't spending on advertising and they're not spending on expanding their technology infrastructure. And we all know that cloud-based and all AI is what's really the fourth industrial revolution is all about. So if we get, misses, I think that it speaks to the broader cycle of where we are in this market with businesses not expanding, not advertising.
And we're really just getting started with these tech companies reporting their earnings. Are there any other results that you are keeping an eye out for today or this week?
Well, really, I really actually am looking just forward to seeing Visa, because I think that the credit card processor and is going to be the financial sector to the upside, because obviously, we've had a lot of consumers really racking up their credit cards. So I don't know, though, if that will be we could also see a miss there, only because we might have people that have already gotten to the point of maxing out their cards and their credit limits they're done. And that could also be a problem for growth for future. So I'm really looking for the guidance from Visa today and the results, and then we'll see what this tech start looks like. I think that if we get bad performance from both Alphabet and Microsoft today, that we should probably be ready and brace ourselves for what's going to come in the tech earnings sector this quarter.
Oh, we'll definitely have to brace ourselves. All right, Rebecca Walser, President and CEO of Walser Wealth Management and tax attorney, thank you so much for your insight. And coming up,